is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Dave in Clearwater. Hey, Dave, Happy New Year. What's happening, man?
Happy New Year to you, my brother. How are you, sir?
I'm doing great, man. How you been?
I am doing well, man. I'm doing well. Can I throw a quote out at you?
Sure.
In the market, somebody knows something. Someone always knows something. That statement was made by a great trader by the name of Tom O'Brien about 6-7 years ago.
Oh, yeah?
And it kind of hit me like a brick. You're right. Somebody always knows something.
Hey, Carlos, what's going on, brother?
I'm calling you back, Tom. This morning I had the pleasure to talk to you and your son, and I don't want to miss the opportunity to talk to you again.
Well, I think you made some money on this bond.
Oh, yes, Tom. Your newsletter helped me.
That's a beautiful thing. We appreciate you growling and prowling with us out here.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't make assumptions. Communicate with clarity. Communicate with others as clearly as you can be, to avoid misunderstanding, sadness, and drama. If all humans would communicate with impeccability of the word, all our relationships would change. There'd be no wars, violence, nor misunderstandings. Market-wise, let's take a look at it out here. We have the Dow Industrials trading up 456. NASDAQ is up 149. S&Ps are up 42. That is a 1.9% top side in the Dow, 2.1 in the NASDAQ, S&P's up 1.6. If we go over to Facebook, whatever Zuckerberg is saying to Congress, folks, bottom line, the equity itself is liking it. The equity just went from a price point of 157. You're at 163.05, and bottom line is you get buyers in here. You know, it has taken out as a little swing intraday. Took it out with volume. You get a small ABC structure on the way up. You get a price projection. It's actually right where it is right now, 163. You know, you had the spike come in at 10-3. 10-3 went from 160 to 163. Buyers there, 2.6 million shares. Let's go see if we can see the buyer, because I suspect there's going to be a block coming in that actually did that. There it is right there. There it is. So 18,000 shares pushed it. 1458. There's the trade. That's one trade, by the way. That's what that baby is. Gold contract. What do we have with the gold contract? Gold contract right now trading up $5 at 13.45. You get silver up 7 cents, trading at $16.60. Light sweet crude. Big number on light sweet crude. Light sweet crude right now is up 227. Let's go take a look at that market right now. That's up 3.7%, $65.80. This is a monster number, and it has volume behind the move, too. This is pretty intense, man. It looks like prices are basically going up. Let's go take a look at the rest of the energy complex out here, because I believe what you had is that WTI, we're at 65.81. You get volume behind the move. If we take a look inside, you get gas. You get gasoline right now up 3%. That's 204 unleaded a gallon. You get heating oil up 3.6. That's trading at 206 a gallon. So big numbers out there. We go take a look at some of the higher volume stocks out here. This is what you have happening. We have Sprint is up 93 cents, big number, 607. Sprint and T-Mobile are talking again. Mr. Dave White nailed that baby inside his newsletter. It's a beautiful thing. Bank of America up 64 cents. Micron Tech up 255. Facebook up 635. Facebook, that's as I just said, that just start getting the juice inside the move. Ford's up 28 cents. You get Apple up 363. Microsoft's up 237. T-Mobile's up $4. NVIDIA's up $13, trading $228. Let's go over to NVIDIA. Take a look at NVIDIA. So you got this has got some good juice behind it. 16 million shares, a lot better than yesterday. Yesterday we had 12 million. You're still going against 23. So you're going to need a lot more juice than that. But bottom line, you get a start. Let's go take a look at Google. Google right now trading at a price point of up $16, 1,031, and Google's still going to need some help. Google hasn't got the expansion yet. Let's go look at Amazon, see what we got happening with Amazon out here. Same deal with Amazon. Amazon's up $29. Sideways day out here. Light volume. You're trying to push into a swing. The volume is dropping on the vine. So we have with Amazon. Amazon is at hit 1435. 3.2 million shares, and you're going into like 12 million and 13 million. So that's going to need a lot more volume. Notes and bonds. These things just won't back down, folks. Bottom line, these are setting up for higher price. You know, they are at higher price. The lows that were established, we go all the way back to October 15th. This thing is backing down today, 4 ticks. That's nothing. It's inside the range that has been trading out here since last week, and you're coming into 1.6 million contracts. If we go take a look at the TLT, see what we have happening inside the TLT out here. TLT right now trading 121.12, sideways move, and you know the TLT has a high volume high of 122.35. So bottom line, the TLT is saying that wants to get up and into that number, and that number, by the way, is where we have the high volume high in the note market, the bond market, all of the above, the 5th of February. The 5th of February is where all these bonds look like they want to go, number one. And the real question is going to be, do they overtake that level? Because if you overtake that level, you're going to be up at the swing highs from December very quickly, because we came down so quickly. The TLT came down from 128 in December to 116. It was a one-way route on the way down. That's how that market traded. We go take a look at the Microsoft. Let's see what we got with Microsoft up here, MSFT. Microsoft right now trading up 230. Volume's not there, but bottom line is it does have price going with it. Intel, INTC. What Intel does have going with it, I believe, let me just look at this. Yeah, well, we'll see if it can hit the lows of the high, which is 51. Yeah, you know what? It's right at it right now. Okay, so what Intel is doing is this. Intel is going after the lows of its high right now. That number is $51.39. We had done 45 million shares there. Now, check this out. This is pretty intense. You're coming into that number with 17 million. You know, we'll see if it digs into that number. Right now, it's 3 cents into that number, and we'll see whether that can hold. Stay right there, folks. We'll be coming right back. We have the Dow Industrials right now up 475. NASDAQ up 159. S&P's up 44. Coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow right now is up 474. Nasdaq's up 161. S&Ps are up 44. Let's go to our man, John in Philly. What's going on, brother?
Hey, Tommy. Thanks for taking the call. I wanted to make this quick and ask you a quick question about the NASDAQ 100 futures. And in regard to price now rallying with Facebook, which is now up at 165.70. But based upon the March 13th and March 27th peaks in those futures, one can calculate confluence using that tool that you've taught for years and years. And in this particular instance, the confluence range, the Fib 618 retrace based upon one high and 382 on the other high. In this particular case, the confluence range is 5 points wide, incredibly tight.
Yes.
My question is, now that we're exactly right there, Tommy, do you see anything in your price and volume that gives us a clue as to, one, whether it will turn at this level and roll over or blow through it?
So you have, as John just explained, confluence, folks, is very powerful. Now, what's also very powerful are ABC structures on the way down and the way up. And, you know, my take on this, John, is that we're still on an ABC down, and it's been confirmed twice. So this has to hold. Now, the C point on this ABC down is, you know, all the way up to 68.49. You know, we broke it. First time we broke it is on the 28th. And broke the B. Second time we broke it was on the 2nd. You know, so the bottom line is that we'll see how this shakes out into the close. Right now, what we're doing is we're testing the highs back at the 5th. You know, so that could, to me, that could hold there and still be an ABC structure on the way down. That's how that's basically set up.
Excellent. Very good. The volume here in the past hour or two on the 10-minute chart, does that tell you anything?
Yeah, it's light. You know, right now we're at 1.7 in the NYS. I mean, in the Nasdaq. So bottom line, that should come in with 2 point something, but you're still light. And the real question is going to be, you know, inside the Qs, it's the same setup, man. So inside the NQs, now let's take a look at the NQs. So we bring up the NQs, get this closer in so we can see it. You have Okay, so you're taking out 10,000, and you took out 10,000. So yeah, in that context, that volume is there. Now watch what happens. Now this is pretty cool. So normally, like Facebook wasn't a small ABC structure up, okay? Because what happens even when it backed down, John, it didn't back down with volume. Whereas the NQs, the B point would be 66.26. We had 10,000 there. We backed down though with 14. Then we overtook that with 12. So clearly for a definition of an ABC down is that that volume shouldn't have expanded down there. So it's not truly an ABC up. But it did take it out in price, and the volume's not bad. That's the real bottom line.
Yes, I'll have to thank you for for teaching that Confluence tool over the years. The first time I learned it from you, gosh, Tommy, it's 10 years ago. Can't believe it's been that long. But David White's, with his chart scanning software and tools, he regularly looks for Confluence setups in which the Confluence range is very, very tight.
Exactly.
And of course, when a pattern sets up where there's a rally or a decline towards Confluence, you're never guaranteed if you get to that level. But as David's work has shown, when you get to that level, and mind you, on the NQ, the June future, 66.50 is the level. That's where we are. That's where we got to. That's a very cool setup. In other words, a low-risk trade to go the other way, and if it gets through, then just come on.
Oh, there's no doubt, man. As this is happening, the volume is light there. So and inside the NDX, what I was looking for when you're doing that too, folks, you really just want to see, okay, what's moving the NDX out here today, and NVIDIA. You get T-Mobile, but NVIDIA is the number. So watching NVIDIA coming into the next 30 minutes is going to be crucial too, because it took out its high. If it stays over 227, 75, it's like, okay, man, that market will stay up. If NVIDIA just backs down 2 to 3 points, that NQ will come down very quickly.
Right. Tommy, thanks so much for your help.
Okay, man, have a great one. Have a safe one. The market-wise out here, folks, you just got to love it. I mean, because it is amazing how fast 10 S&P points can go. Just to give you an idea out here, this morning, how this thing shook out is that we came down. This downdraft here was like phenomenal at 20 past 12. We went from 26.51 to 26.35. All the indices, they crashed in about 2 seconds. And that was about saying what the Feds had come in on Cohen about. Bottom line, snap right back in a second. Then you had the seller came back in at 20 past 2. 20 past 2 went from 26.58 down to 26.47. Guess what? Snap right back again. So bottom line is that whoever is that big seller, and it very well could be more than one seller, but the way that this is trading out, that looks to me like it's one monster that's coming in, battling the bulls. So we'll see how this shakes out coming into the close, because when you see something like this, folks, that seller is not going away. You don't plaster in 83,000 contracts and then another 56,000 contracts in the matter of 2 10-minute bars. That's where all the volume is downtown today. That's where this is. And in fact, it's not all downtown. Now this is what just happened 10 minutes ago. We had the up bar at 11:40 today, 26.63. That had to get tested, because that volume bar had 72,000 contracts. That's when we tested it, and we tested it with 30,000 contracts. We tested that right at 3 o'clock. So this is the number, man. It's the bulls, the bears, fighting like crazy. See where this whole baby wants to go. If we go back over to Facebook and see, it's really wild, folks. Check this out. This would be really bizarre, man. Someone had brought this up in the den. So think about this for a second. Facebook has information on everyone, right? You know, whether you're on Facebook or you're not on Facebook, if you have friends that are on Facebook, guess what? You know, bottom line, you can be places. And it's really intriguing that when you actually really dig deep down into that in your own head, like what exactly does that mean when you're going in front of Congress? Well, we'll find out. I haven't been watching the testimony, but I'm sure that that testimony is going to be crucial as to will Facebook be able to hold up in this context, or in fact, you know, bottom line is that are they going to have some problems? And if they have problems, folks, there'll be major problems because it's information that they sell. That's the bottom line. It's private information. That's how they make so much money. Stay right there, folks. Come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
There are 5 reasons traders and investors fail to spot bear markets. It's a set of 5 very specific patterns that have preceded every bear market during the last 130 years. I'm Steve Rhodes, author of Mastering Probability and the #1 market timer in the nation as ranked by Timer Digest for the S&P 500 for the last 3, 6, and 12 months. You see, timing is everything. And on Wednesday, April 11th at 5 p.m., I'm going to share with subscribers exactly how to time the next bear market. Look, the last 3 bears averaged a decline of 49%, which means you've got to earn 82% just to make your money back. Wouldn't it be easier to avoid the next bear market altogether? Sure, countless experts tell you that markets can't be timed, but what they're really saying is that they can't time the markets. So let me teach you how. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Don't let that next bear market eat your porridge. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 449, Nasdaq's up 154, S&Ps are up 40. Gold, let's go take a look at the GDX out here. So GDX needs some volume, folks. We got price going, but bottom line is that 21 million shares is just not getting it. You're going into 38 million. Now, coming into the close, we'll kick in some volume, as does, that's just the way this GDX trades. But because the price spread is not so dramatic, I don't think we're going to kick in a huge amount of volume. We go take a look at Gold Corp. Now, what Gold Corp has done, Gold Corp's one of the first equities inside the gold market that has got over the February 15 time frame, and that's a big one. So that's one of your benchmarks. February 15th, what that was all about is that we had come off a low on the 9th, $12. This went up to $13.80, pulled back with light volume into $12.20 again, and took off topside. It's a big number. The reason it's a big number is that what you have is that you have the aspect of a high volume high with Gold Corp at 15.55. And that was on the 16th of January. So that number there is a big number to keep your eye on. We go over to the dollar index. What you're going to see inside the dollar index is this. Dollar index down 214 ticks today. You're at 89,320. You have 21,000 contracts traded, which is not huge, but it's volume. It's, you know, you're coming into the big day of strength. Now, the day of strength that we had out here was a monster. And this was the on the 28th of March. That's where the dollar index went from 88,895 up to 89,820. That's where, folks, the dollar should have been able to basically at least make the March 1st high. It had every chance in the world to get up, over, blow that number away, and guess what? Just gave it up in spades. It couldn't make the March 1st high, number one, which is unbelievable. And then when it got up there, it had 22,000 contracts and gave it up on price. It got to 90.295, gave it up. Come off that. As we come off that, now you're coming off that, and you're doing around the same amount of volume. So what that sets up, number one, you're into the bar, plenty. You know, your 89,820 is the high, 88,895 is the low, so you're into the bar. That saying wants to go to the bottom of the bar, and more than likely what we're going to see is that this is going to go right after the 87,830, which is the 16th of February low. That's how that baby's setting up. If that's what we get, let's go over to the silver market. What we're going to see here is that you're going to get an expansion inside the metals, and what we're going to want to be looking for is that as the expansion is happening, we want to see volume start expanding. Silver has been the dead dog out here. Silver did catch a bid today and does have an expansion of volume, and that's what we need, I mean, in spades. 88,000 contracts, good contract volume. Yesterday was 74. You're coming into 79. So that's a decent setup as it stands. Your next swing point is $16.81. And, you know, bottom line is we know how silver likes to trade. And what does happen with silver, highly volatile, much more volatile than gold. It can have big price swings. And that's what we're looking for. Let's go take a look at a couple silver stocks out here. If we look at First Majestic, that's going to need more volume. That's up 11 cents. Pan American Silver, that's not bad. So Pan American Silver is not bad. That's 9. In fact, this is good. Pan American Silver is getting expansion of volume. This is a big number. So 900,000 shares going into the high of 925. That's a good number. That's what we're looking for. That's encouraging. That's definitely encouraging, because Pan American Silver, big silver producer, bottom line is that that makes a difference. Let's go take a look at Heckler. Heckler needs some help out here. Heckler's trading $3.61, and that had quite a downdraft when they had bought an additional company. Let's go take a look at a couple of the gold stocks. We take a look at Barrick. Barrick's edging higher. No big deal there. Newmont. Yeah, Newmont's got action. Okay, cool. So Newmont's got a small expansion. No, not really expansion, but you're going. Yeah, Newmont's going to need more volume. Newmont needs more volume. The two FNV, so Franco-Nevada, these two have been little problem childs. And they haven't been problem childs in years. It's Franco-Nevada. Franco-Nevada is down from a high of 86 bucks. You're at 69. That needs volume. Rangel Resources, that's up 161. Let's try to make it inside this higher range, but that needs volume also. Royal Gold has taken the mantle up. Oh, this is good. So Royal's up 190. And you get juice behind the move. Okay, not bad. So Royal, for some reason, has taken the mantle away from Franco-Nevada. as well as Rango Resources. Let's take a look at the Anico Eagle. That's going to need more volume also. So you get the volume's not bad here in Anico Eagle. If they could push a couple 100,000 in the next half hour, which I doubt they're going to do, that would really get some action going. Inside the Dow Industrials out here, I believe every Dow stock is in the green right now. No, the only one that isn't is Nike. Boeing is the big number out here inside the Dow. Boeing's putting 84 positive points. Caterpillar's putting 32. Goldman's putting 32. Let's go take a look at Goldman because what you had, Goldman was the strongest financial stock yesterday. Yeah, it's still going into 4.4 million. You've only done 2.5. If we take a look at the XLF, that doesn't have the juice either. 58 million is going into 89 as well as 88. These equities are going to need a lot more volume to get through right where they're at. There's no doubt that you get the bulls and the bears fighting like crazy at this level, but you need some heavy juice to get through this level, because what you're looking at is you're looking at the aspect of the second sell down, and that's what we're going into. We're going into the second sell down, and everything above that, people are looking, and they've had plenty of time to think this through. Like, okay, am I going to stay in this deal? Or am I going to sell this deal? Because when we're talking about from where the highs are, if you're talking about where we are now, yeah, you know what? Guess what? You're back where we were in December of 2017. But if you start talking where the highs are, the bottom line is that the highs are 200 S&P points higher than we are. It doesn't seem it, because we've been at this level for a long period of time. But the cash S&P is 2872, and we're 2661. So that's that level there. You had the level of the first downdraft, which is the big, end of January, beginning of February. Huge counter trend bounce, then another downdraft. And people have had a long time to think about that. So that is the, technically you can see resistance. Fundamentally, that's kind of the definition of the more longevity that you've had out here, that people can think, do I want my money back? Do I not want my money back? Do I want to get out of the market? Do I want to protect myself? All those things are what basically beget either buying and or selling. Right now, we have the Dow up 429, NASDAQ up 144, S&P's up 38. Stay right there, folks. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. So Dow right now is up at 259. Nasdaq is up 154. S&Ps are up 41. Let's go take a look at the PPLT. So the PPLT, folks, is the ETF for physical platinum. The low out here for the year has been 83. The high is 97. Right now we're trading at 88.60. And let's take a look at this. Oh, this is, yeah. So I saw that strength yesterday was big strength. Well, this is pretty classic, actually. So what do we do here? You come all the way back into where we took off from December of 2017. Monster volume, by the way, too. So that's 100,000 shares, and you came back into that with 27,000 shares. Yeah, you take off, and you get juice. Now this thing will build some cars to get back into 90. Put this on a weekly and see where we're setting up. So on the weekly, yeah, this is a good setup, man. On the weekly, this is looking like, you know, not only the 90s on the game board, but bottom line is that it couldn't bust them down. It came into a monster volume, stopped in its tracks. Goes topside, has the price spread that says it wants higher price. And it's going to be all about, of course, well, actually in the platinum market, it's not going to be all about the good old US dollar, because what we have had is that we had the bottom line is that the dollar has been weak, and platinum just continued to get smoked. You know, so kind of different setup that we've had inside platinum, and that certainly does make a difference. After you hit a low, you come off that low, and you have some juice off that low. Let's go take a look at the SLV. So the SLV is the ETF for the actual physical silver. This is not a bad setup. You know, you're at 6.5 million shares right now. You're coming into 9.4. Your high in this consolidation, oh, this is pretty cool. So the high in the consolidation actually has volume. That's pretty neat, actually. The high in that consolidation is 1590. Yeah, this thing wants to go. And then actually in silver, now this is also pretty cool. So the high in silver also has volume at 1664. This has been a long road, but you know, the way that these are set up right now, I would say that they want to go at least test them. And because we've been in a consolidation for such a long period of time, that in itself is going to be a big number to keep your eye on. The reason that if we break this consolidation actually started all the way back. Let me put this back. I got to do this. Let's see. How many years? Let me do it this way. So if I put it in this way, yeah, see, this is pretty intense, actually. This consolidation started April of 2016. And we had the huge run in August, pulls back, and we've been laying down there since that particular point. So if we get traction over that level, it's going to be a big number, man, big number. We go take a look at the, let's see how well Zuckerberg continues to do out here. Bottom line is that market-wise, no matter what he's saying out here, folks, Facebook just did a small ABC up. A point is 150, B is 160. Oh, actually, this on a daily, it's a decent one here. So check this out. Your A point would be 150.51. Your B is 161. So let's just say it's 10 bucks. Well, it just hit it. 166 is the A to B equals C to D. But bottom line is that that's what you've done. Now you're right at the point of slamming into the 161 to 170 bar, which has 129 million shares. And thus far, you've only done 51 million. So you can see supply versus demand, not even close to higher price. That's how that baby is shaken out. If we go take a look at Google and see what Google is doing, not that Google, Google's a different operating company. They probably have as much information on us, but it's done a little bit differently because of the fact of how Google basically pushes their advertising versus how Facebook gives you so many tools. Google still having a hard time. You're up $17, but yet you're coming into some big numbers out here. Let's go over to that oil market. So oil went topside big. ExxonMobil caught a bid. Chevron caught a bid. Exxon right now is trading up $2. And it's going to need more juice than this, but it's the first time that it has caught a bid since going back to February 27th. Now, February 27th, in 4 days, we had gone from $74 up to $79, then gave it up in spades again. It goes all the way back down to $72. So bottom line is that at least it is getting a bid. If we take a look at Chevron, what we have with Chevron out here, same type of setup. Chevron, yeah, 5.8 million. It's going into 6.3. It's not bad. Now that's not going into the downdraft, but you got to start somewhere inside these oil companies. What you do have, which is pretty intense, is that the Saudis are talking about they're getting excited about $80 oil now. So if they're getting excited about $80 oil, that's going to be pretty intense because what we have had out here today, you get some decent numbers up here. We get the crude up 3.75%, heating oil up 3.5%, gasoline up 3%, and of course May 30th, it's right around the corner. We're going to be driving pretty soon. That's 204 unleaded gas. We had the WASDE report out today. Bottom line is that it didn't do much to the markets. Wheat's trading up 0.2%. You get beans up 0.2%. That's corn's down 0.3%. I suspect intraday we probably had some heavy volatility. No doubt we did. Wheat held pretty good though because it had a low out here of 481, closed out at 492. Not a bad number. We go take a look at the corn market. Corn 397 a bushel. That's hanging at the highs. 192,000 contracts. Yeah, that's hanging at the highs, and actually, it has some volume up at these highs too, actually. So, and this contract's been volatile, moving 15 cents in a day, and of course, inside the futures market, that ends up being one monster number. There we go. So Dow Industrials right now trading up 443. You get the Nasdaq up 153. S&P's up 40. The market bottom line, it's holding coming into this closeout here, folks. You're holding a price. We are at the composite is at 7106. 71.12 is the swing it's trying to get into, and we got to 71.17. So 10 minutes into the indices, 25 minutes into the futures. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. And folks, don't forget, I'm Mr. Steve Rhodes. Tomorrow night, 5 o'clock, 5 to 6 o'clock, going to be doing a great webinar for you. All you have to do, you want to be in that webinar, come over to our website at TFNN. You can see it right in the top of the carousel. You can test drive Steve's newsletter. It comes with a 30-day money-back guarantee. That Mastering Probability, that's going to get you into the webinar. And the webinar, the 5 reasons traders and investors fail to spot a bear market. And Steve is not saying that bottom line is the bear market. He's going to go through what he's looking for tops and or bottoms. Steve is going to compress decades of knowledge into an hour by showing you the exact step-by-step process that you can use to spot the next bear market, to identify important price bottoms, for tops, bottoms, on any instrument at any time. So check it out, folks, right on the front page of our website at TFNN. Let's go take a look at the volume out here as we're coming into the close. Inside the NYSE, we're at 572, so that'll push in 572. That'll push in about 800 million coming into the close. Inside the NASDAQ Composite, we're at 1.6, so that's going to do about 2.3, 2.4. ETF structures, bottom line, you're up there with weak volume once again. We're at 93 million inside the SPY. You're going into 148 million. Inside the Qs, we are at 43 million, and that baby's going into 80 million. So going to need a lot more juice in order to get up over this whole consolidation area. IWM, bottom line, not a bad setup inside the IWM. IWM is up on 19 million shares now. It's certainly going into a lot more than that, 35 million. But the IWM has peaked its head over all the last highs that have been generated out here since the 26th of March. So the bottom line is that that is saying they do have a shot. And what that IWM would be, by the way, folks, is that when you get oil up like that, there's a lot of those commodity stocks that are inside the small caps. Stay right there, folks, as we are coming after the close. Lots of numbers coming out after the close. We have the Dow right now at 414. NASDAQ is up 141. S&Ps are up 37. Coming right back, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Get our man, Tim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
yeah.
Holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. April 10th, man. Time just flies. Be impeccable with your word. Manifest your true intentions. Regardless of what language you speak, your intent will manifest through the word. What you dream, what you feel, what you really are will be manifested through what you say each and every day. Market-wise, let's take a look at it out here. We had the Dow Industrials finish up 428, NASDAQ up 143, S&P's up 34. Percentage-wise up here, what you have, folks, is that you have the Dow Industrials up 1.7%, S&P's up 1.7, NASDAQ up 2. Let's see where we are in the context of this consolidation. So, Composite right now, your swing point that was going after is at 7,112. We got over it, couldn't handle it. Bottom line, you're at 7,094. So you're going into, let's take a look at this. So we're going into the 5th as well as the 5th of April, as well as the 29th of March. So volume-wise out here, folks, we did 2.2 billion. On the 5th, we did 2.1 billion, and on the 29th, we did 2.5 billion. Okay, so here you go. We got, let's see, 7120, 711. Okay, so we haven't tested that yet. Bottom line is that you know, you got over the 4th rather, closed underneath it. You didn't get over the 29th. Bottom line, you got into it, closed underneath it, and you did have 300 million lighter shares. It would have to get into that number, which was 3 points higher than we were for a failure. So bottom line is that that can get up and at least test that number, which is 7120. If we look at the NDX 100, the Qs, what the Qs did out here today, so did they make? So they made it to 161.73. They get over the 161.58, and we did 47 million versus 43 on the 5th. So the bottom line is that the Qs 171. Oh, this is pretty cool. Okay, so the Qs did fail on price and volume. This is how this shakes out. So the 29th, you hit $161.71. Today we went over that by 2 pennies. You did 47 million versus 68. You closed underneath it. Subtle, but bottom line, that's a failure on price and volume. The SPY, SPY, let's go take a look at the SPY out here. So the SPY out here trading $265.15. We did volume of 100 million shares. You're going into 82 million. Didn't make it to the price that. You're going into 129 million. That hasn't made the price yet either. So it's going to be intriguing to see if, in fact, 265.11. This gets really interesting. So check this out, folks. This got over your downdraft from Monday, your high of Monday, by 265.11. No, it closed over it by 3 pennies. Now, if that didn't close over by 3 pennies, that'd be a monster failure. Because, well, of course, what we did there, we come down 179 million, you're doing 103 million. IWM, the IWM, a little bit different. IWM closed up 284, $153.38. You got to 153.95. It got over that swing point, and it had the volume. So now you're dealing with 154.13. And you're going to need a lot more volume than we have out here. But bottom line is that price-wise, what the small caps did do is that they at least made it on price. Gold contract has some juice underneath it. Let's go see what the GDX did. GDX needed some volume out here. 34 million, not bad. It put in a lot more than I thought it was going to put in. It's going into 38, so that's a good number. That's a good number. I like it. Okay, that put in some good numbers, man. Let me just see. That's a large number coming into that close. Well, they put in 6, 7, 8. Yeah, they put in 8 million coming into the close. So bottom line is what you have there is that this baby now is pushing into the swing, and you get some juice coming into that swing. The GLD, if we take a look at the ETF structure for the physical gold, that also had an expansion of volume too. Good. 5.2 million shares. Yesterday you did 4.1. It's going to need some juice, though. You're coming into 11 million. You're coming into, well, you're coming into 6. The high is 6. It's coming off a decent base, though, in order to get up into that higher price. If we go take a look at the TLT, bottom line, notes and bonds, folks, they continue to want higher price. It's like, you know, bottom line, anybody out here, the TLT also wants higher price. It will not back off. And, you know, that's a very big danger point for the marketplace. Because if you remember, when we came off the highs in January, so the cash S&P is still 200 points down from where we were. When we came off that high, that was all about rates going up very quickly. And what was happening there is that, so markets went down, bond market went down. As that goes down, higher rates go up. So your first leg down, everything was going down. Everything, okay? That's when the S&P went from 28.72 down to 25.32. You do the huge counter trend bounce. When we came down in February, just for those 4 days, as the market went down, bonds went higher. We made another high, another, came right back. As the market came down again, bonds continue going higher. Now bonds won't back off. That is basically a heads up that this market still has some major problems in it. King dollar wants lower price. Let's go take a look at some of the higher volume stocks out here today. And it was a low volume market. You had GE up 22 cents. Facebook did an ABC structure on the way up as soon as Zuckerberg started talking, well, right after that. So whatever he said to them, bottom line, market liked it. Micron Tech's up $2.52. Apple up $3.20. You had ExxonMobil up $2.20. That caught a big bid. NVIDIA up $12.50. If we take a look at NVIDIA right now, trading 4.9 million. That 4.9 is going against 6 and 10 million. Stay right there, folks. Gonna be coming right back. Dow Industrials finished up 438. Nasdaq up 143. S&P's up 36. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
TFNN.com takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials finished up 428. Nasdaq up 14. Nasdaq up 143. S&P's up 36. Let's go over to our man, Mr. Andy Hecht, as we do each and every Tuesday and Thursday. Don't forget, folks, Andy's got a great show right here at TFNN. 5 to 6 Eastern Standard Time every Tuesday and Thursday. You can get that program by either going right to TFNN, hit Tiger TV. You can also go to YouTube, just pull up TFNN. You can subscribe right there. It's free. Bottom line, then you get all the programs right on your mobile device. So it's really easy to do. As you're over at TFNN, check out Andy's newsletters. He has 2 separate newsletters. He has a daily newsletter, which is Daily Essentials. Weekly newsletter, the Technomento Commodity Report. You can get both of them 30-day money-back guarantee. And today in the commodities market, we get a big day. We get the WASD report. Andy Heck, what's going on?
Hey, Tom. How are you?
I'm doing great, man. Yourself?
I'm doing good, thank you.
Cool.
Yeah, we had a big day today, the WASD report, but not much action in the grains following the WASD.
Yeah, I saw that.
Kind of told us what we knew. It said that, soybean stocks are down a bit. So soybeans trading around 10.50 on the May contract. That was up 3 cents on the session. The corn, it was good enough to keep the price up around the 3.90 level.
Yeah.
And the wheat settled up 1.25 pennies, but new record highs in wheat stocks. But bottom line is, coming into the planting season, and hey, it's all uncertain. A lot of uncertainty out there.
It's probably decent news that, they didn't get croaked, right? Wouldn't that be positive?
Yeah, it's strong. The crops from South America were not up to snuff. But right now, the U.S. is the 800-pound gorilla. It's all up to what happens with the weather over the coming couple of months. That's the bottom line for everything, for grains. The one thing I will say, we added 19.5 million people, more people to eat in the first quarter. In 2000, there were 6 billion people. Now there's 7.465 billion to feed.
Wow. And
that will continue to underpin these markets, and that's the demand side of the equation for grains, for foods, and for all commodities.
Yeah, there's no doubt about that, man. Holy cow, It just doesn't stop, right?
No, it just, well, keep on. There's more people being born than are dying. That's for sure.
Yeah. Pretty cool.
So, so today we're having Mark Zuckerberg testify.
Yeah, well, whatever he said, man, the stock went up pretty good as soon as he started yapping.
Yeah, I think, I've been watching it. He's given some, he's answering the questions. He's being cooperative. And we'll see, how this all shakes out. I guess there's more regulation coming the way of the internet. That's what it seems to feel like.
Well, maybe not the internet. Maybe Facebook.
Facebook. Well, yeah. Facebook. I'm sorry. I'll change that. Companies like Facebook, and Twitter, all of these kind of social media type sites, certainly. In other commodities, the interesting thing today is that the Chinese president really calmed the markets today.
Yep, no doubt.
He said that, he's going to play ball, and it seems like, he put out an olive branch which Trump really took immediately and posted something. So the markets really like that. And there goes the Dow Jones Industrial Average, up better than 400 on the session. The dollar came down. It's very interesting, Tom. The Chinese currency is, the president of China is a very smart guy. And the bottom line here is that the Chinese currency is they're positioning it to take away market share from the U.S. dollar. And, they started an oil contract in Shanghai back in March.
Yes, right.
Just a couple of weeks ago. And, if that works out
They already got a gold exchange there, right?
Yes, you'll be seeing a lot more yuan-backed based contracts. And that's not bullish for the dollar, in my opinion.
Right, no, I agree. No, there's no doubt. Right.
loses ground as the reserve currency of the world.
Well, just imagine if the Chinese turn around once they get that really going. If they say, you know, like you're an oil producer and say, hey, listen, Andy, I'll buy all the oil you want, but I'm going to buy it with my currency, and then you figure out what to do with my currency. Well,
exactly.
You'll figure it out, right? I mean, that's okay.
That's exactly what the Chinese said to the Putin government when the Europe and the U.S. put sanctions on them after Ukraine. They did some big deals, yuan-based deals with the Russians.
Right.
And remember, you know, the Iranians, the Venezuelans, the Russians are going to use this Chinese exchange because, you know, the regulations favor them. Because they can.
Yeah, right. I mean, you know, the bottom line, folks, is that, and this is where you really want to get your head wrapped around currencies, because all currencies is a means of exchange. You just got to figure out, okay, I got this. Can I use it in my country? If I can't, where can I use it? And it's a one world movement right now. So, you know, you can do a derivative product off it pretty quick to get delta neutral. And delta neutral just means, folks, you could have one currency and make another deal. For another currency, you have the currency you need, and you're not going to lose or win if either one of the currencies go up and down. That's you know, so.
So the bottom line is, I view this as very bullish for gold, because whenever there's dislocations or changes, dramatic changes in the currency markets, it tends to mean, you know, listen, gold is the oldest currency. It's the oldest means of exchange, and it's the one that central banks hold. And don't forget that China is one of the biggest buyers of gold, official sector buyers of gold, because China's the world's biggest producer of gold now. And most of that gold is not going into investors' hands. It's going right into the central bank vaults.
That's pretty cool. Yeah, that's interesting. Right.
So the bottom line is, that's all supportive for the price of gold. And I like what gold's been doing. I mean, you know, you got a lot of action. You had a lot of action in the platinum group metals last week.
Yeah, listen, yesterday, that's a big sign of strength yesterday.
Well, last week, I think platinum group metals reacted to the tariffs because catalytic converters were mentioned in the 1300 products.
Okay.
And I think that sent, you know, platinum and palladium, you know, just dosing down. But they've come back, and that was strong. Silver really hasn't moved much. I have to see silver back to 17. For gold to go up to 1400, I think we got to see silver at 18 bucks. But, you know, I don't know if that happens before or after.
Well, we you know, I like what happened today. I mean, well, let's put it this way. When I say like, you know, we had caught a bid, folks, and you got some volume behind the move, and it pushed its nose out over the consolidation of the last few days. And
yeah, it's up a little bit.
You know,
no question,
silver, you know, is basically a psycho, and you know, can go up. Bottom line, 40 cents in a day in a heartbeat. So
it could go up $1.40 in a day very easily. It hasn't done it in a long time, but it definitely has that potential.
Yeah.
You know, so the precious metals, you know, led by gold, look good. Oil looks very good here.
That's crazy. So the Saudis. The Saudis said they're looking for $80 oil now.
Right, I saw that. You know, they're looking for, they're praying for $80 oil.
Yeah, well,
but they are
evidently someone's buying it behind them, right? I mean,
they are working on a deal with the Russians. You know, an overall OPEC deal that would extend the production cuts far further than into 2019.
Stay right there, folks. Andy and I are coming right back. Our phone number is 877-927-6648. Andy and I are going to be right back, folks. Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected.
Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Talking with our man, Mr. Andy Hecht. We're talking markets, we're talking commodities. And, hey, Andy, Bitcoin, right? I mean, Tommy and I were talking about this morning. It's pretty amazing. Bitcoin had a price spread today of only $120. Oh, no, not even $105.
I noticed that, and the difference from last week is like minimal. So I think this puppy's gone to sleep a little bit.
Yeah, it's pretty amazing, man.
Yeah, and by the way, you turn on the usual financial press, you don't hear a word about it. It was all they talked about for a long time. Now it's in the back of the bus.
Yeah, no, and the low, actually, folks, I guess the spread was 220 today, but the low that was established when that first leg down, 59.22, and we actually got into the lowest yet. Well, this is on the Bloomberg now because they were only going during their market hours, but 65.13. So it is pretty wild, man.
It is wild. The thing was 6 cents in 2010.
That's intense.
That's intense. So big movers today. Sugar put in a new low. We got down to like 11. Let's take a look here. 11.96. The one thing I will say about sugar.
That's been a one-way move, huh?
Yes. Look at cocoa. If you want to look at commodities, you want to look for value. You're going to find some value in the sugar market. The cyclicality of commodities, you look at cocoa, look at what happened to cocoa, look at sugar. The trade might take a lot of patience, but sugar's cheap here. Sugar's cheap here.
Hey, they still give it away.
Come on. The other big mover today is the red metal, copper. Copper is telling us that everything's okay with the economic landscape, and we got up to $3.14 today, and we are closing right near the highs.
That's a good move, man.
Very nice move in the copper market. And the thing I really like about copper on the longer-term chart, Tom, is it made another higher low. We got down to 294.60. back on March 26th. The previous low was 292.05, and this is what copper has been doing since January 2016 when it traded $1.9355 a pound. It has never violated a low, and as long as it stays now above this 292.05 level, and perhaps now above 294.60, that pattern, that bullish pattern, remains intact in the red metal. So that's good. And listen, copper came down because stocks exploded. You know, stocks went from like 200,000 tons to 388,000 tons on the LME.
Okay.
And that's the biggest amount of stocks since 2014.
Wow.
And copper did not violate the lows. I look at that as a
pretty
very
cool.
sign.
Yeah, and you know.
By the way, I wanted to point something out from the last segment.
Yeah.
About this LME.
Yeah.
Very interesting. Keep your eye on the LME, because one of the signs that China is being successful with the oil contract is if they start to introduce copper, aluminum, nickel, lead, zinc, molybdenum, cobalt contracts in yuan terms on the LME. Don't forget, the Chinese own the LME.
Let me go. You know, yeah. Let me. Let's go look at the CME for a second, because that will get really interesting, man. Just the CME in general. So the Chicago Merc is at 163 bucks. Yeah, that's still. Yeah, it's still strong. Okay, cool. You know, if we go over to the largest copper stock, too, Southern Copper, bottom line is that you're at all-time highs. And,
right.
And this came in today with volume, too, which is pretty cool. 180. You're up 181. You're going into 1.2 million. It did 1.2 million. So it's pretty.
And Southern Copper, Tom, is the best proxy for copper. You know, when you look at Freeport-McMoRan, they have other commodities there. You look at some of the other big producers like Glencore, BHP. They're very diversified in their commodity production.
Right.
Southern Peru Copper, SCCO, it's almost operates as an ETF for copper.
Yeah, no doubt. Hey, let me look at. I want to look at this Glencore. Glencore was getting killed yesterday in London.
Well, what happened with Glencore?
Look at that. Yeah.
That they have a very big deal with Rusal, which is a big Russian aluminum producer.
Right.
And the sanctions took this oligarch who owns Rusal down.
Okay.
And today it's up, Glencore, because Ivan Glazenberg, the CEO of Glencore, stepped off the board of Rusal and basically ended contacts with them. So, you know, because of the sanctions.
Yeah.
So even though they're in Switzerland, they are being very responsive to that. So that's why Glencore got slammed. I think Glencore's a buying opportunity here.
Yeah, let's see. Cancels Rusal share swap.
Right.
Share swap.
And the bottom line there is this is all about sanctions, all about the oligarchs, and a lot of pressure from Europe, not so much the U.S. You know, Glencore is in Switzerland. That's where they operate.
Yeah, look at that. They were going to do the swap 8.7% stake in the aluminum producer United company Rusal for shares and another of. So the Russians, yeah, that makes sense. They get a lot. They have so London. You know, some of those London people are going to get that hurt by this also, because there's a lot of trading inside. Well, there's a lot of trading and everything in London. That's the bottom line, right?
London, even Frankfurt. But you know what? Is very interesting about Glencore. Do you know that they're the third biggest copper producer in the world?
Okay. Okay.
I
didn't know that.
I think you have Codelco first.
Okay.
You have Freeport-McMoRan second. And Glencore's third. I think BHP is fourth, and I think Southern Peru Copper is like fifth or sixth. But Southern Peru Copper is just copper.
Right, no, I'm with you.
They're all copper. And Glencore's everything, you know, from oil to fish meal. And BHP's big diversified, and FCX has all kinds of interests as well.
Yeah, see, I get FCX up right now, so this is pretty cool. So you get FCX. It's interesting. Out of 18 billion, 12 is copper, but then you got 2 is gold, and another couple are other, you know.
Yeah, other commodities. They had some oil interests too. They sold most of them off, didn't they?
Yeah, you know what? They did it. They bought oil at the highs, man.
And sold it at the lows.
Oh, my God, because the oil's
like
not
most
in here.
commodity producers, yeah.
Man, how does that happen and they still can stay in business, man? They just make so much money, right? I mean, that's bizarre, man.
The margins on copper are really good, Tom.
Okay.
The margin on copper production is really good. The production cost of copper is probably down around $1 and change a pound.
Really?
I mean, yeah, I think so. Now, I saw a study from CPM that came out that said that gold production costs have risen significantly.
Well, hey, guess what? Inside the mining business, folks, your largest cost is oil and cement.
Energy, right.
And cement. And their cement's up, so oil is going up. So this is going to get really intriguing, like, okay, you know.
Listen, oil is up huge.
Exactly. We better start getting some bids inside the metals market because you can have higher prices in metals, but guess what?
It's eating away at the margin.
It's eating away at the margin, man. And that's going to be a big number if that's what we got. So,
hey, watch that dollar. The bottom line is that the dollar failed again, Tom. This dollar cannot stay over. It can't keep its head above 90.
And it had every right to go after that March 1st high swing. No doubt.
Every right. You got negative 40 basis points in Europe. You got 1.5% here, and it's going higher.
No, totally. Listen, folks, right here, 20 minutes from now, you're going to have a great show. I'm Mr. Andy Heck. Andy, thank you so much. Look forward to the show in 20 minutes.
See you soon.
Stay right there, folks. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
There are 5 reasons traders and investors fail to spot bear markets. It's a set of 5 very specific patterns that have preceded every bear market during the last 130 years. I'm Steve Rhodes, author of Mastering Probability and the #1 market timer in the nation as ranked by Timer Digest for the S&P 500 for the last 3, 6, and 12 months. You see, timing is everything. And on Wednesday, April 11th at 5 p.m., I'm going to share with subscribers exactly how to time the next bear market. Look, the last 3 bears averaged a decline of 49%, which means you've got to earn 82% just to make your money back. Wouldn't it be easier to avoid the next bear market altogether? Sure, countless experts tell you that markets can't be timed, but what they're really saying is that they can't time the markets. So let me teach you how. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Don't let that next bear market eat your porridge. Sign up today.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Let's go take a look at the XLF. So, it's Tuesday. Friday, folks, starts the financials Banks off in a big way. JP Morgan is the first one to kick it off. That's going to be kicked off Friday morning at 7 o'clock in the morning. XLF right now, bottom line is that you're off the highs of January, which is $30.32. You're basically off 10%, 9% off the high. Out here today, couldn't handle price. You know, you try to get into the price point of 27.47. Bottom line, you get to 27.89. Closed out at 27.73. You know, 27.90 is the number. We got to 27.89. You're going into 78 million. You did 67 million, which is not bad. Not great, but not bad. But that isn't the spike either. The spike is up at 85 million. If we take a look at JP Morgan, which is going to be one of the first to kick it off, JP Morgan out here today, up $2, and it hung at the highs. So JP Morgan tomorrow morning does look like it's going to try to get into this 112.87 once again. We got to 112.87 today, closed at 112.51. Looks like enough strength, though, to try it once more. Bank of America, BAC. Now, they're coming out a little bit later. They're coming out the following Monday, I believe. Yeah, they're coming out the 16th at 6:45 in the morning. That doesn't have any juice underneath it. That sideways move out here today, you're going into 115 million. You did 60. Berkshire Hathaway, they don't come out until May, but they are the largest weighting structure inside. May 4th, they're coming out. That was up $2.47 today. Now, that also didn't have the juice, and it didn't have the price either. Got up to over the highs of, well, actually at the highs of Monday, gave it up. You had 3.2 million shares versus 5.5. So that still wants lower price. Citigroup has been the dog extraordinaire. This stock's in so much trouble, it's crazy. Up a dollar, you know, you're going, 16 million is going into 31. And when you just take a look at Citigroup, it's hard to comprehend that Citigroup, folks, in 2006 was a $570 stock. And now you're trading at $70. That's after, of course, they did reverse stock splits because the stock had gone from $570 down to $9.70. Actually, it was in the low. It was actually lower than that because they did a 10-for-1 stock split. So what is that, 90 cents? That's pretty intense. XAU and the HUI. Let's go take a look at them. So the two gold indexes, XAU today up 89 cents. Nice. I like this. Okay, so yesterday we had an expansion of volume. That's good. That means we're going to have an expansion of volume out here today, too, because yesterday was a slower day. So XAU is laying right at its two swing points from the 26th of March as well as the April 2nd. So it's going to make a run for that. If they can make it, you benchmark inside the XAU and the HUI, folks. Happens to be Valentine's Day. February 14th, Gold Corp is already over that number, so that's an indication that we're going to go over that number. But that is the benchmark, and that's a long way from where we are right now in the XAU. We're at 81.94. That number up there is 86. The Gold Bugs Index, which was having a huge problem getting off the bottom and staying in the higher range. The higher range that we're talking about is over 174.19. Now you're at 177.21. Let's go take a look at what we had on this yesterday. The reason we're looking at yesterday is that you don't get the volumes till 8 o'clock at night. So this was pushing with volume also. So we're at 177.21. Your two swings there are 179 as well as 179. They're both 179. That's pretty cool. And this does have that nice spike at 190.98, and that also is on the Valentine's Day. So these equities want to get into that area. The real question is going to be, as they get into that area, are they going to have strength to carry through? If we do look at Gold Corp, what you're going to see with Gold Corp, bottom line has not only done it, it's over. $13.80 was the number. got up there. The first time it got up there with strength on the 23rd of March. Then what it did is that it backed down, came back right into where the strength came from and came with light volume. So you went topside with 9.9 million shares. You back down with 5.1. That's what you like to see. Now we're building cause. And in Gold Corp's case, and this is really good for the market, for the equity market, for the gold equity market in general, is that Gold Corp does have a high volume high laying out there at $15.55. Now, if we bring this back, yeah, this is encouraging. I'm going to bring this back 3 years. So when you bring this back 3 years, this has been a long consolidation. You're talking about from February, folks. It's actually from January, because the biggest run that we've had in the past 5 years was from January of 2016 till July of 2016. May and July, 2 separate highs. That was an extraordinary run. It was a one-way run. I mean, they just exploded topside. Gold Corp went from $9 to $20. And then, you know, bottom line is that you're talking about almost a year and a half coming back into those lows. But this is absolutely a classic. And what I specifically mean is that you go topside with volume, you pull back, you have lighter volume, we get another small sign of strength January of 2017 through February. We get another small sign of strength this December through January. Now, this is what the difference is. The difference is, and this is why these equities are stronger right now, is that we did not back down on a pullback as much as we did in 2017, as we did coming into the 2018. The back down has been very small in the context of what happened between when we hit a low of 2016, we made the run to 2017 in June, you back down dramatically. When we made the run from January of 2017 going up to February 2017, we didn't back down as much. So what that sets up a chance that you can get much higher. And if we take a look at this continuous contract inside gold, it's quite clear when you lay this down that you'll see that we've been at these highs for quite some time, you know. And the highs we're talking about, that's 1377. You're at 1342. You bring this back a little bit more, and you're going to basically see that this is a decent setup. And the launch, that 1377, if you launch that 1377, you will get some monster action, folks. The reason being is that we are talking then, the consolidation on the daily we were talking about brings you back to December 2016. The consolidation on the monthly, this has been going on since April of 2013. You're talking about 5 years. You know, you launch that one, guess what? You're going to be at 1794. Stay right there, folks. Come right back. And, of course, don't forget, I'm Mr. Andy Heck's going to be coming up next, talking markets, talking commodities. Just go to YouTube, folks. Hit TFNN, search TFNN, subscribe. All the programs come right up, free. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver-producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go overseas and take a look at what we had today inside the DAX in Germany. So DAX in Germany today was up 135 points, 12,397. And let's see how we came into this. So you did get an expansion of volume. We have 102 million, but yet you're going into 135 and you're going into 211. So bottom line is that that's basically kind of like our market, and it's laying at the exact same spot. The differential is that the DAX in Germany, bottom line, is still in the February 6th, the downdraft. The UK, FTSE in the UK, let's go take a look at the FTSE inside the UK. Both of these broke this downdraft pretty heavily too. FTSE in the UK got a bid. FTSE in the UK, this has some price spread with it too. So we got over the well, we're right at the top of the consolidation. FTSE was up 72 points, 1%, big number. We did 740 million shares. That is going into 1.3 billion. So that's not enough. But bottom line, it looks like to me like the FTSE will test the 73.26. That is the high that was generated out here on the 27th. Let's go to the Nikkei in Japan and see what we have happening in Asia. Asia is going to be opening up in approximately 4 to 5 hours. Nikkei out here last night. That couldn't hold price. Okay, so 21,794. Yeah, that couldn't hold prices as it's coming up into its range. And if we go take a look at the, let me go look into the Hang Seng. Come on, baby. All right, there you are. Hang Seng, okay, so the Hang Seng caught a bid up 500 last night. Yeah, that's amazing, actually. Even a bid at 500, it's still into that bar, meaning February 5th downdraft. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it, step into it, take ownership, and fly with it. Thanks for being here. Stay right there, folks. Man, Andy Hex coming right up. Go get him, folks.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.